Ken, thanks for sharing that. I've met with people over the years that have had some long-term care policies in place, and they've been pretty old, actually, right? So if I've seen one, it's usually been around for a while,
Yeah.
and typically there's a lot of frustration that surrounds kind of that policy, that product. Usually they got it, and they had some pretty decent benefits, and over the years those benefits have been decreased, and then also they've got some notifications that the premiums have actually increased.
Yeah.
Uh, what has happened, right? And it's also my understanding that there used to be a pretty broad spectrum of providers that were available, but over the years that network of providers has shrunk quite a bit. Why
Yeah.
is that true, and why is that?
Yeah. So address a few of those questions. So when I first, once again, started in this industry, there was greater than 100 carriers, insurance carriers, that provided some type of nursing home care, and then fast forward into long-term care policies. And today there's probably around 20 carriers. So we've seen a contraction of carriers. Not everyone has stayed in the long-term care industry, but that doesn't mean that the policies go away. That just means that the carrier they bought the policy from just no longer is in business to sell new business, but they still service and manage those policies and take care of the client's needs and deliver on the promises that they've met. The other thing that we've seen with a change in long-term care, and actually, let me go to the rate increase. So the older nursing home policies, or the older, what we refer to as traditional long-term care policies, and I can explain the difference between traditional and asset-based. But traditional long-term care insurance policies, which are really have been around a little bit longer than asset-based long-term care policies, those policies have had rate increases. And in some cases, when we've seen people that have taken a reduction in benefits, it actually wasn't that the carrier reduced the benefits. They did, but it was only after the insured authorized a reduction in benefits to keep the premium down. What's happened is, with these rate increases, in some cases, the clients have been given the opportunity, the new premium, I'll just make up a number, went from $1,000 to $1,500. And if you don't want to pay the additional premium for that same benefit package that you have, you can reduce your benefits and we'll keep your policy premium at $1,000. So they'll take a reduction in benefits. It might be the duration of how long the policy will pay long-term care benefits, or it could be the daily or the monthly maximum of benefits that gets reduced to bring that premium back to that original $1,000 premium. So that's what we've seen. Why is it? There's really a few reasons that we've seen rate increases. One, and this is the good news for the consumer, bad news because of the rate increase, but what we've learned is that consumers don't cancel these policies. Once a consumer buys a long-term care policy, in the first year, we get about 2% of the people cancel the policy in that first year of coverage. They just decide it's not for them for whatever reason. And then every year thereafter, what we refer to as a lapse, or cancellation of the policy, is only about 1%, or a little bit under 1%. When we look at other types of insurance products out there, other types of health insurance, and really just about any other insurance you look at, lapses and cancellations are much higher. And so until we had learned this as an industry, we used some assumptions that were a little greater than the 1% in the years following of the policy. And so now it meant that more people kept the policy than expected, which meant there was more claims than expected. And that's one of the reasons for the rate increase. The other reason for the rate increase is if you go back, 2007, 2008, look where interest rates were, and what did they do for the next roughly 15 years? They did nothing but go down, 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 and it's really only been, and I'm speaking more your world and your expertise, but it's only been in the last really 15, 18 or so months that we've seen interest rates start to come back. And insurance companies rely heavily on those interest rates for their investments to be able to offset some of the costs of future claims is from how they invest the reserve dollars. And because the interest rates were so low for so long, that affected the pricing as well, which meant carriers that had older policies that were counting on a higher rate of return on their investment and didn't receive it had to raise rates to make up for that lost income that they weren't receiving from the interest rates. All right.
Yeah, Cameron, I would tell you what. I'm sorry.
No, go ahead.
Rudely interrupted. Go ahead.
Yeah,
Doug.
I'm sorry.
Yeah.
Cam. I'm not sorry to you, Cameron. I wanted to say that what you're saying happened to my parents, where they had more of the traditional long-term care policy. Then we got a letter. Premiums were going up, just like you said, 50% more, or you could lower the benefits. And my mother-in-law got pissed. I've been paying this thing. I mean, I knew when the premiums were due is in November because they were complaining about it every November of paying these premiums. But I think it was very valuable to have it. And when they got this note increase, my mom-in-law, she wanted to cancel it, but I'm like, Ma, no, we're 78. I know we've been paying into it for a while, but like now is when we need it. I didn't tell her this, but if she would have canceled it, I would have paid for it myself.
Sure.
Like eventually things are going to come down to the next generation. And so fortunately she kept it. And my mother actually is in this, went to assisted living, and she needed to, but her lifestyle jumped up. I mean, she lived in the same house from when we were younger, or like from when I was born. And now she had a nicer place, food, laundry. It was almost like I kind of told her she was in Cabo, an all-inclusive resort for like Sun City, Cabo, right? But I would say that long-term care policy we have for her has literally been a lifesaver. To be able to give her the care that she needs.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.